Welcome to Fear and Greed, the week ahead. I'm Jennifer Duke and I'm joined by economist Stephen Koukoulas. You'll find him at thekouk.com, that's thekouk.com, and on X using the handle thekouk. Stephen, good morning.
Good morning, Jen.
So first of all, last week there was a little bit of data out, quite a lot of talk. Can you talk us through it?
Yeah, look, the highlight, I think, was the monthly inflation number for the month of July. Came in lower than market expectations, confirming that we're getting this deceleration in inflation. So from the peak that we saw in December 2022, which hit 8.4% in monthly terms, gosh, that was a real problem on inflation. But now here we are in July, or the July data, showing that the annual inflation rate's eased to 4.9%. So we've lost 3.5 percentage points off the annual inflation rate. And again, I don't mean to torture the data or manipulate it too badly, but if you look at what has happened to the monthly run rate since January, so the 7 months since January, and you annualize that, so divide by 7, multiply by 12, you're getting an inflation rate that's just around about 3%. And so it's sort of suggesting to me that the inflation momentum has certainly come off the ball, that we're heading towards the target. The economy's weakening. Yeah, last week we saw building approvals down again. So, I think we're not going to be seeing a lot of new construction activity in the near term as one of the other, concerns on the economy. Retail sales, they were moderate after a couple of falls. So, the economy's sort of muddling along, which says to me that the inflation rate's going to be continue to fall through the remainder of this year and into 2024, even though things like petrol prices have jumped a bit in the last few weeks.
That sounds like really, really good news. And it seems like there's quite a bit happening in housing as well. Can you talk us through that?
Yes, well, the CoreLogic numbers came out on Friday for the month of August. Yeah, they have that comprehensive set of numbers. And as we were able to deduce from their high-frequency daily data, house prices rose 0.8%. This is a nationwide figure, 0.8% in the month. And that's 6 consecutive months of increases. From the low point that was recorded in February, they've increased by around about 5%. So, roughly half of that 9% drop that we saw in 2022 and very early 2023 has been reversed. And, the momentum still seems to be pretty solid. Those supply and demand dynamics are still in place. We've got still strong population growth. And as we alluded to with the building approvals numbers, we're not building many houses. So good old-fashioned supply and demand are just continuing to dominate the interest rate hikes that we've been seeing. So price is still going up and not really showing a lot of signs that they're losing momentum.
I'm really amazed at how resilient the housing market's been, actually, through this cycle. I don't know if you feel the same way.
Yes. Look, I'm surprised at how strong it's been. I was never in the camp that prices would drop 20 or 30%. I didn't think that was realistic. It's never happened. And again, it was somewhat apparent that post-COVID, we would be reopening the borders and the like. So, it was always going to be a weak period. But this rebound is something that I think's been much stronger than anyone, even the most optimistic house price bull would have been thinking. And again, it's one of these ones. Obviously, there's an intergenerational issue, or people who really are being squeezed out of buying the property market. And of course, it's tightness in the housing market is showing up in rents, which are still increasing at a rapid pace. That was one thing in the inflation numbers last week that was still accelerating dwelling rents. So we've got this issue that's coming through. However, as the Reserve Bank have noted many times in the past, there is a wealth effect from housing. So if house prices go up, on average, this is not everybody, but on average, Australians are wealthier. And when they're feeling wealthier, they tend to spend more. So, there's, again, as we discussed many times, the interlinkages on housing, the economy, interest rates, population growth are many and varied.
I think that's a great point. And we've obviously got the Reserve Bank meeting this week. Can you give us a bit of a sense of what you're thinking they might do?
Yes, I think this is a relatively straightforward one, or I hope it is. No change tomorrow when the Reserve Bank board meet. It's the last meeting for Dr. Lowe as governor before Michelle Bullock takes over in the middle of September, so roughly 2 weeks away. No change, and for the reasons that we've just discussed, I suspect, and that's because inflation is tracking lower, and we are yet to feel the full impact of the 400 points of rate hikes. That's the other thing, again, that Reserve Bank's been talking about. They've delivered a lot of rate hikes. And while there's a sort of a knee-jerk reaction, they hiked yesterday and there's an impact on consumer sentiment, the actual effect on the economy, as we know, takes, they call it a long and variable lag. And I think that's sort of code for somewhere between 6 and 12 and 18 months before it really hits the economy. And so we had 4 rate hikes in the first half of 2023. Here we are in September. Yeah, the effect is still to come through. So for the RBA tomorrow, no change. They'll still probably sound a little bit hawkish. They'll be expressing a few concerns. That inflation at 4.9, yes, in headline terms, it's too high. So they'll kill any discussion of rate cuts. And I agree, there's no chance of rate cuts anytime soon. But they'll sort of probably say that, we need to keep a steady hand in that narrow path to lower inflation while maintaining a good labour market. We're on that path still, but we just need to be careful not to over-tighten anymore. So no change from our friends at the RBA.
And Dr. Lowe's also due to give a speech. I believe it's called his final remarks at the
Yes.
Annika Foundation. What do you think he might remark on in his final speech?
Look, if I was Dr. Lowe, I would be, acknowledging some of the errors that have been made, of course. That you can't not do that if you've been presiding over very low inflation, very high inflation, and giving, misleading guidance on where rates are going. But having said that, I would also point to the fact that here we are. We've got through a pandemic with reasonably good economic outcomes. Here we are discussing, the unemployment rate at a 3-point-something level, and that's a wonderful legacy. Full employment, we've sort of got it, and it occurred without wages breaking out. Wages have lifted too. That's another good thing that he could emphasise, but that they're not too hot, if you know what I mean. That there's this the scorecard, if you like, on the economy. While there are a few question marks and a few little hiccups and things and a few unpleasantries in the scorecard on the economy, full employment's a mighty good thing. Moderate wage growth that's sustainable in that 3.5% to 4% level, which appears to be where wages growth is being maintained at the moment, is a good thing as well. So I'd expect him to sort of be reasonably positive whilst acknowledging a couple of missteps in recent years.
And what else do we have to look forward to for the rest of the week?
The other big one is on Wednesday. We get the June quarter GDP results, and everybody loves the GDP results. It's going to be a soft number. And I guess that sort of feeds back into the RBA decision. They obviously meet before the GDP number comes out, and as I understand it, they don't actually have it before them when they discuss interest rate settings, as I understand it.
Oh, that's awkward.
Yes, it's a bit of a funny one. But it's probably going to be a pretty soft number. We know a lot of the partial indicators. Retail sales went backwards. We had good CapEx numbers last week too. Business investment, which was going to be adding a bit of a floor to bottom line GDP. Net exports are probably neither here nor there. So GDP probably around about 0.4, 0.5 quarter on quarter. In per capita terms, probably close to zero. In annual terms, probably dipping below 2%. So, a soft result, but we are not in free fall in terms of how the economy is going. So a lot to digest later this week. RBA, GDP numbers, Governor Lowe's speech. I love it.
I think it's going to be a really, really busy one. Is there anything else that we should be expecting coming up?
Look, there's a couple of bits and bobs too. We do get the Melbourne Institute monthly inflation gauge, not a bad leading indicator on the official inflation numbers. The ANZ Indeed job ad series comes out. With the slowing economy, of course, there's been a dip in demand for labour, so probably another moderate fall in the number of job advertisements coming through. And then we've got things like new motor vehicle sales and the international trade data. We're going to be recording another big international trade surplus. Even though some of the commodity prices have come down, export volumes are still pretty resilient, and imports are probably pretty weak as domestic demand in Australia is slowing. So, another 10-odd billion monthly trade surplus.
Good grief. It's going to be a very busy week. Stephen, I hope you have a really good one for the rest of the week.
I will, Jen. You too. Thanks very much.
And that was economist Stephen Koukoulas, better known as The Kouk. You can find him at thekouk.com and follow him on X using the handle The Kouk. I'm Jennifer Duke, economics correspondent at Capital Brief, and filling in for Sean Elmer. And this is Fear and Greed, the week ahead.